Hey soldiers, let's build wealth by making inflation work for us. You have $100? If you don't, go ahead and save it up. I'm going to give you a technique that's going to allow you to beat inflation over the long term and also acquire assets. You know why that's important? Because with inflation, and we just saw inflation, the numbers went up again. Everything, you feel it, food, clothing, gasoline, the price of everything is up, including the price of assets. Look at real estate. Real estate prices are elevated by and large. That's good for folk who own real estate. You know what else has appreciated, i.e. inflated? The price of quality companies, shares of quality companies. Now, of course, this hasn't happened with all companies. Disney is a prime example of a company that's not executing very well, and that lack of execution is reflected in their price, the price of their stock. But I'm going to talk to you today about a way that you can sidestep all that and still get the benefit of an appreciating stock market, paper assets, okay? So we're going to talk about today how you can get in on that and take advantage of these inflating, appreciating prices. Now, look, if you've got $100, great. Put it away for this effort is what I suggest. This is not advice. I'm just telling you what I'm doing, all right? If you're already there and you have assets stored away, you can employ this technique on behalf of a son, daughter, niece, nephew, organization that you care about, right? And I know it's difficult to get in there and analyze stocks. Sometimes some people just don't want to deal with that. I'm not going to say it's difficult. It's actually a lot of fun, but it is something that needs to be done as part of your due diligence, and it can be tedious. I won't lie to you, all right? But it is a necessary evil when it comes to evaluating individual companies. Let's talk about a way that you can dispense with the evaluation and scrutiny of individual companies and invest in the overall success of the market. Now, all you need to do is take $100 out. Do you know that plenty of these brokerages have now set up methods where you can go in and invest not only in individual stocks, but also in ETFs on a fractional basis? That's right. Now look, we'll look at Fidelity. I think Charles Schwab has it. Webull has it. All of the big guys have it, okay, where you can invest in fractional shares. Now, what I am looking at putting money in on behalf of an organization so that when, it's time for me to leave this world, I can bequeath those proceeds to that organization. I'm looking at something that none other than Warren Buffett has said that if he were starting out today, this is all he'd need to do. He wouldn't need to do all the analysis. He'd just do this. He'd invest in this. What is he talking about?
I think it's the same thing that makes most sense practically all of the time. And that is to consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time. So you know the investment universe is going to do very well. The Dow Jones Industrial Average went from 66 to 11,497 in 1 century. And then since that century has ended, it's more or less doubled again. American business is going to do well. The trick is not to pick the right company. It's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500, and to do it consistently, and to do it in a very, very low-cost way, because costs really matter in investments. If returns are going to be 7 or 8%, and you are paying 1% for fees, that makes an enormous difference in how much money you have on retirement.
That's right. The S&P 500, it is an index that looks at the 500 largest companies, most of which are based here in America or are considered American companies. Some of them are foreign companies. Now, we did a video on what an index fund is. I'm going to link to it in just a few minutes here so you can check that out. But this index fund, again, tracking those 500 companies, can you believe that over the last 10 years, it's had a return of over 12%? And guess what? In the last 5 years, the S&P 500 has returned 51%, just over to be exact. So now look, past performance is not indicative of any kind of future performance. That is true. We could have a situation where aliens land on the White House lawn and decide that we're going to be their food, okay? In which case, your stock portfolio, your asset portfolio will be the least of your worries. But I will tell you this in all seriousness. The S&P 500, as you can see here from this chart, has steadily marched upward. And over the course of time, this index has seen war. Okay, it has seen the assassination of presidents, attacks on the United States of America, all types of financial calamity, Yoko Ono, and still it marches on. Okay, so when you hear some of the more adverse things that are going on in the world, don't necessarily see that as doom and gloom. See it as the reality, but one in which markets will probably go on and increase away from over time, okay? Does seem dark when you're inside of an incident, okay, sure. But according to this chart, the S&P has generally climbed the staircase over time. And it also may interest you to know that the S&P 500 over its lifetime has returned greater than 2,500%. So you heard Warren Buffett and what he had to say about it. This index is a measure of market performance in general. You don't have to get in there and evaluate 500 individual companies. Although it may behoove you to take a look and do some research on some of the larger companies in the index, some of those companies that make up a larger share of the index, like Apple, for example. Okay, but the general theme with this is I'm not going to use the term set it and forget it. I have heard Warren Buffett use that in relation to the S&P 500, but I am going to say rather that you can, or you're supposed to, if you're going to invest in this, again, this is not advice, but if you're going to do that, it's not something where you're going to be hitting refresh every 5 minutes, all right? This is something that you're going to look at periodically in order to just see what your performance is. But this is designed to benefit you over the course of time. So you combine that with the ability to go in and invest in this, if you choose to do this after doing your due diligence, on a fractional basis, you can get in the door and not have to come out of your pocket with, there used to be a time where you couldn't invest in mutual funds unless you bought, or index funds unless you bought at least $2,500 to the table, okay? Now the markets have been opened up wider, okay? They're more accessible for all income levels. Fractional investing gives you the opportunity to get in where you fit in, start to build an asset portfolio, and take advantage of the same types of principles and characteristics of the market that people like Warren Buffett are taking advantage of, okay, and building wealth off of. Everything's proportional. Of course, you'll see the same percentage gain that, someone like Vanguard would see to the extent they're invested in the S&P, but the actual dollar amounts, of course, will vary. But that percentage piece, you can share in that. You can have that same performance. So consider taking some money and putting it in an S&P index fund on a fractional basis at first, but don't leave it at that. As you start to do better, then Go ahead and invest more. Okay, it's still your money. What I would like to do with all of my investments is reinvest any dividends. Now, when you go and you set up a brokerage account online, you're given an opportunity to say whether or not you want to reinvest dividends. That's a good idea as far as where I sit. Now, depending on your age, you may want to take those dividends as income. It's all based on what you decide after your due diligence. But remember, dividends are taxed, whether they're taxed as income, whether you take them as cash or reinvest them. Just keep that in mind. So get out there, research this on your own, and rejoice in the fact that no matter where you are, I played the video from the young woman the other day who was lamenting the fact that she feels as though she cannot get ahead because her and her husband are not making a lot of money. Listen, most of these brokerages will let you invest for as little as $5 on a fractional basis. Many people in America have a spare $5. Start to build that up. Sacrifice the latte once a week if you have to until you get in a better position. But you don't want to just be working for a living. That one income stream, that W-2 income stream is the highest taxed, all right? It's the one that you control the least because someone could come in and say, hey, a firm across the globe bought the company, they're laying everybody here off, all right? That's a possibility. You don't even control your income. So you might need a raise, but if you're working for somebody, chances of you getting it, say you walk into the boss's office and say, hey, look, I need a raise because inflation is up 10%. So I need at least 11%, keep my head above water. That's probably not in the cards. But to the extent you own and control assets, you have more of an opportunity to have those assets help you build wealth, even in an environment where you don't have, a lot of excess cash. B, those assets, once they get going, they can help you purchase other assets and really get that wealth snowballing into a big old wealth avalanche that you'll look back on 5 years hence and be very thankful that you started with $100. God knows where you'll be after that. All right, guys, we're doing a lot on the channel in terms of focusing on acquiring assets. Take a look at this video. We're talking about actually being able to acquire real estate with no money down. Yes, it is possible. I've done it. Watch the video, find out more. Guys, I'll talk to you soon.